Hello, everyone, and welcome into CrushTheStreet.com. We got a favorite returning guest here at Crush the Street, David Morgan of the Morgan Report. Someone who's going to be able to make some sense of what is going on in the precious metals sector. Someone who's advised us time and time again to be positioned in precious metals, especially at times when it didn't feel good. I mean, the environment was miserable. Nobody wanted to hear about gold and silver, and especially the mining stocks. But here we are. Hopefully you've taken his advice and listened to him when he said at $1,200 gold to take a look at it. Consider buying some gold if you don't have any in your portfolio. And we're going to be discussing silver as well. Obviously, not moving up as quickly as gold has been moving up. So could be some leveraged opportunity there. And of course, the mining sector. But without any further ado, David Morgan, thanks for coming on Crush the Street with me today.
Kenneth, thanks for having me.
Let's chat. Let's start off this conversation by discussing the coronavirus. This has overtaken the headlines. People are worried, and I should say investors, the stock market is actually worried about the implications of the coronavirus. And it's interesting because, you know, as we were talking before the interview here, markets don't seem to care about endless amounts of debt, you know, endless deficits, endless monetary madness, monetary policy madness, ultra low interest rates. All these things are water off the backs of the stock markets around the world. World War III, the potential of a World War III, you know, bombs going off in Iran. Again, a non-issue for stocks. But here we have the coronavirus. We're seeing a massive correction in stocks, and it's ongoing. I mean, it's happening day after day. These triple-digit numbers on the Dow Jones, I mean, sometimes quadruple digits. We're seeing pullbacks in the stock markets here. So pretty big deal here. I'd like to get your thoughts on this as it pertains to the markets.
Sure. I spent probably almost too much time looking into almost everything on the coronavirus. I just wanted to try to get a handle. But regardless of bioweapon or natural caused, or is it enhanced by 5G, or is it propaganda or real? Any of that stuff really from an investor perspective doesn't merit a lot of weight. And the reason being is what we want to see is the actuality. The actuality is the markets are reacting in a very robust fashion to the downside. And this is taking the miners with it. The number one question I get the most often is, if the stock market sells off hard, what happens to the miners? And the answer is, if we have a hard sell-off, almost every time the miners will go along with it. So you could be in a situation where I, as well as many in the peer group, will state that gold is the most negatively correlated asset to the stock market, and it is. But that's gold, not gold stocks. So what we're seeing is a lot of the top tiers, and I want to say, you know, I got a lot of my members, subscribers are feeling the pain. And last year, January to January, 7 out of 7 of the top tiers were up. The average is 63%. I've said this in other shows. But the top ones, I mean, they're all up at least 43%. One silver stock's up 100% January to January. That's fallen off. One that's been a leader for a long time was a 10-bagger for us, and it's a top-tier stock, fell off drastically. Another one is sort of a stalwart as well, is off. And some of these, the earnings really weren't off that much, just missing guidance slightly. So they're getting hammered. And these are, you know, solid companies. So the answer is fear and uncertainty. Whenever there's uncertainty in the market, so the uncertainty spills over into this. We're not sure about the general physical economy because of the coronavirus. What kind of repercussions will there be, you know, month, 2 months, 6 months out? The answer is no one knows, but it's obviously impacting the supply chain immediately. Will that affect the miners? Will it cease mining in some areas? Will it curtail deliveries of spare parts, or, you know, when something breaks on a big piece of mining equipment, if you don't have spares sitting in your, you know, warehouse locally and you have to send for it, is it going to get there? I mean, these type of questions, even if maybe people haven't articulated them to that level, that's sort of in their subconscious. So the miners are not doing well. There's a few. I've actually put out a video about a week ago, Kenneth, and said, look, get out of these. I'm putting these on hold and move into these, which I've done personally. And those are holding up right now, but holding up doesn't mean performing as well as gold. Gold has gone basically from that 1550 level, which is now support, not resistance, all the way up to almost 1700 recently, and it's backed off slightly. So gold can go up and gold stocks can go down. If the fear and uncertainty is overblown, and I believe it could be, then when markets start to come back, I think the miners will start to perform and probably outperform. So if you're taking a long-term view, like a year out, I still think that the miners will outperform gold. But I think it's best just to wait at this point in time and watch and see, because this is a very fragile system because of the just-in-time inventory and so much of the pharmaceuticals coming out of China and everything, and a lot of things. I think it's 28% of the total manufacturing in the world is from China. And it's all interconnected, and it's very dependent. I mean, you could have everything for an iPhone except, let's say, the Gorilla Glass. Until you get that, you can't sell it, right? So I've probably gone on a little bit too far, Kenneth, but I really think it's important for people to, if they're in the sector, keep your physical position and probably wait on the stocks. I've been a bit wishy-washy with my members because, as things change, and they're changing rapidly, you have to change. I mean, it's not like everyone's got a perfect crystal ball. Certainly I don't, but I certainly do better than average, let me tell you, because I know what my peer group does. Nonetheless, if it's time to regroup and come up with a new strategy, it's time. In other words, take action now. So right now, the next report's going out this weekend. I'm basically going to say at the end of it, because I've written most of it once it's edited and wordsmith and all that. I really don't go back and change, but I always leave myself final thoughts. And I'm probably going to write in there a fair amount about, let's just build some cash for now and watch the markets. Hold on to your winners, trim up your losers, and wait. And, keep your physical. Obviously, I've always preached, as you know, physical first, leverage second.
Yeah, that's a good word right there, David. Let's talk a little bit about what we're seeing in palladium and rhodium. Rhodium's a physical market, right? And we're seeing what it's like for a metal to actually move up, arguably in a free market. If I go back to December of 2015, rhodium was in the $600 range. I mean, we're 20x higher here than where we were when gold bottomed at the same time in rhodium. And, sometimes I guess it's hard to get excited about, maybe a small move in silver or a small move in gold when you have some of these other things, moving like so drastically. And of course, that's where the miners come in. But, when it comes to, how long gold has been suppressed and depressed at these levels, especially silver, when we look at, where silver was and the potential that there is in silver, I mean, could we see a rhodium type move in specifically silver, but gold too?
Sure. Well, I said quite a bit, so I'll just try to parse it out. We had actually one of our members ask about the rhodium market. He had some physical. I suggested he take a profit because the spread in rhodium and palladium is just huge. I mean, in rhodium especially, it's just, like you wouldn't believe the percentage spread between actually what you're seeing on a screen and what you actually would be paid for it. On palladium, we already witnessed this. This is the second time. We witnessed it. I'd have to look at the chart, but I think it was in the early 2000s. Ford Motor Company switched from platinum in their catalytic converters to palladium because it was much cheaper. And when they went to the market to buy the physical, they discovered that there wasn't that much palladium around. The market shot up drastically. So the physical market did take control of the price. And now we're in a situation where everyone's taught that, platinum is for diesels only and palladium is for gas engines only and the catalytic converters. That's really not true. They are interchangeable. But no one's going to do what Ford did, I don't think, anytime soon, meaning shut down the whole line and change out the catalytic converter composition and then restart the line. I mean, it costs a lot, and there's lots of reasons why it's not efficient to do it that way. will we see that type of move in, the silver market? David Smith, that works with me, he actually has done a lecture that outlined that, and he's going to be doing another one, I think, at the Money Show coming up. And I'm going to be doing a webinar for free for everyone, probably within about a week, Kenneth. And I'm going to talk about my favorite way to invest in the platinum group metals right now. And you will get the name of the company. In fact, you'll be hearing from the CEO directly. It'll be free, but once it's captured, I will put it out on the internet to sell it, and it's going to be a whopping $10. And you will get the name of the company. So it's a pretty big gift, I think, and just try to recoup some of the cost. Everyone thinks everything should happen for free, but I've got bills like everybody else. I own my server. I got to pay to have it edited and all that jazz. So anyway, let's heads up for everyone. And I think I covered it. I do think that you could see, okay, so go back to silver. Will it move like palladium? Yes, if and only if you see the amount of monetary demand or investment demand that you've seen in the past. And I think it could happen. I mean, those lectures that I've been doing the last couple of shows has been, what if silver was treated like gold? And I went back and I thought about the ratio in a different way. And I said, the ratio gold to silver has always been around 16-to-1 or lower for thousands upon thousands upon thousands of years, like 4,000 or 5,000 years. It's only been in the last 120 years where it's been above 16-to-1. So what does that mean? Well, if the obvious is staring at me, I already knew the answer, but I thought I'd make the point very blatant. When gold and silver are money, they trade at basically the natural ratio. When silver is trading as a commodity, it could trade at this 100-to-1 ratio. And it's done it a few times. And we're there or close to it right now. However, the monetary demand of silver could come back in the market. And if it does, and I believe it will, in fact, I think it'll come in very strongly, then it could start acting like the palladium market has 2 times before, where the physical market absolutely controls the price, and these paper paradigms move away. I mean, it's like they still exist. Back in the first move in palladium, the LME forced the owners of physical that was held on their exchange to lease it per their edict. They determined what the lease rate would be and who the physical went to, and you collect the lease payment. So, is that a free market? No. No, it's not. But that's what they did because it was on their exchange. So anyway, I don't want to go too far down the rabbit hole, but I think we are going to see a great, huge market in the precious metals. And I do think palladium is a pretty good indicator for what could happen. And I think gold will, I still think gold will hit 5,000 at least. And I still think that silver will trade maybe at a 20-to-1 ratio to that. So, it remains to be determined. I'm not giving up, and it's not because I'm stubborn. It's because I know how markets move. And I know that there are so many problems out there that you said the market's, rolled off the back. This debt problem is still huge. And if you factor in that the corporate bond market is basically frozen right now, which is something I mentioned on Greg Hunter's show. I said, people don't pay a lot of attention to the foreign exchange market. But, if you're having this big outbreak in China, are you going to accept, their currency? I know that sounds like, what are you talking about, David? But think about it for a while. It's just like a game coming to your town. When the carnival shows up and you get the tickets, they're valid as long as that carnival stays there. Once it goes away, that ticket's worthless because you have to have it. And that's the same thing with these foreign currencies. Sure, they change internationally. It's the biggest market. I know that. And there's trillions every day trading. But what if you were suspect of a whole nation state being able to pay it back or paying it back, and you thought that they were going to degrade their currency to such a level that it wouldn't be worth much? And they're all in the same boat. I'm not picking on renminbi. I mean, everyone is playing a game as if these currencies have value long term. Anyone that would buy a long-term bond for safety purposes out of their mind. The only reason that any of this bond market's moving like it does is because it's all speculation. It's all gambling. Everyone thinks interest rates are going to go lower or higher, and they're making a bet in the bond market and capturing those short-term moves. But as far as holding on to a 30-year bond at this point, do you really think that the 30-year U.S. Treasury bond is going to be worth anything 30 years from now? Guarantee it won't. I don't guarantee much.
So, David, what are your thoughts on what we're seeing in the equity markets, and a potential economic grind? I mean, with people not traveling as much, people not going to stadiums, supply chains. I mean, how damaging could this be? And this is a global, and it's not a global pandemic yet, but it could be. And just the fear could cause people to stop spending and really lock up the economy. I mean, can you imagine the type of central bank intervention it would take to counterbalance a real grind to the global economy? Talk about a black swan that really none of us were talking about. And I kind of like the way Peter Schiff articulated it. I mean, he talked about this bubble, this huge bubble. It doesn't really matter what the pin is, but how big the bubble has become. And, we know this bubble has gotten big, but I wasn't anticipating a virus being something that will cause this economy to come to this grinding halt here. And I know we're not there quite yet, but it's possible.
Well, it is, and the fairest answer is I don't know. I think it's actually being overdone for a while, but that remains to be determined. I don't know for a fact. Usually markets overreact in both directions. Since we've only seen, these 1,000-point moves a couple of days in a row, and I fully admit that, but if you look at it on a percentage basis, 3% is a huge move in the Dow, 3.5%. I want to be on record as knowing that. But if it was in a real panic, you see 10% or something along those lines. We haven't seen that yet. I don't think we will. I think this thing's probably moving more toward the old adage, never let a good crisis go to waste. I do think that things will subside. And even if they don't, it sort of depends on what the news feed does. Think about Fukushima. No one ever thinks about that anymore, but they're still putting in this radioactive water in the Pacific Ocean day after day after day. It's just not in the news feed anymore. So everyone forgets about it. Could be the same thing here. This thing might get more traction, but if the mainstream news feed basically ignores it, then the alt media will probably ignore it to a large degree, and then the markets could stabilize and come back. And I think that could be the case either way. In other words, I think it could be overblown, or the news feed's going to make sure it happens. And remember, it's still an election year, and even though Trump and the media don't get along, doesn't necessarily mean that those that do control the media aren't going to move it in the direction that they see the most beneficial to them, their greedy selves. So the school's out on it. I know it's detrimental. I know it's causing a real effect. And how big is that real effect is the real question. The answer is I don't know, but I'm watching carefully. Obviously, the market now is telling us that, one, they doesn't like uncertainty. We already know that. But how uncertain are we? And the answer to that remains to be determined. And I think probably not as bad as some commentators believe. Is this the bubble breaking? And the answer is I don't think so. I wish, in a way, I don't want to see doom, gloom, fear, or any of that. I don't. But I'd like to see some truth and honesty in the financial markets for a change. And for that to happen, I'm sorry, but you got to, no pain, no gain. We are going to have to go through the pain. And it's not just the US of A, it's everybody. And until we get to that point, however we get there, we really don't have a chance of righting this wrong, this idea that we can just print wealth, that one nation state gets to dominate every other one just by printing money, that pieces of paper are real wealth when it's just a symbol right now. And all these things that are really wrong, starting basically with the financial system. And there's all kinds of other issues that I am well aware of, but I don't really articulate because I don't spend enough time. But this is the crux of the problem, Kenneth. We need to get back to basics. And the basic fact is we're not telling the truth about anything anymore.
Yeah, that's a good word right there. Yeah, interesting comments. And I tend to agree with you to a certain degree regarding the coronavirus. Is it like the flu? And just try to imagine what the world would be like if we hadn't been used to the influenza virus. But if I told you my son got the flu tomorrow, I don't think you'd be panicking, worrying that my son was going to die because he got the flu. But yet the flu kills lots of people every single year, and it's the young people, it's the old people, it's the weak people that are dying from it. So it's hard to say, if this virus is even something that should be that we should be worried about. So having said that, gold moved up because of some of the doom, some of the fear. If this does subside, is that downward pressure for gold here in the shorter term, or is gold being reflected fairly? And there's some honesty starting to surface in the precious metals arena.
It would have overreacted. One, you don't have silver confirming it, so that's kind of important, but not. It's something I like to watch and see, and I like to see a confirmation. Doesn't have to, but I think a lot of it is, the algorithms and the people in the know that there'll be a run to gold, a brief one maybe. I'm still very bullish gold long term, I want to be clear, but what I'm saying is, answering your question, it could have gotten overbought for a while, and it will come back down. It could hit 1750. There's not a lot of upside resistance from this point up, so it's easy to move it higher. And the powers that be know that, and so do the algorithms. So you could see it. You could see it go to 18. I don't know. But once this thing subsides, either in the real world or in the newsfeed world or both, I think you're going to see it come back down. And that's when I'm looking to see some type of stability and probably re-enter with some of the cash I have right
now. Good stuff there, David. David Morgan, everyone of the Morgan Report. David, if people want to learn more about you and the Morgan Report, let us know a little bit more about it. I know you've alluded to it. You mentioned some of what you guys are doing with the mining stocks. But, if you have anything else to share about it, please let our listeners know what they can expect to find.
Sure. Just go to themorganreport.com, and you should be looking at the blog 2-3 times a week. Get on our free email list. When I do the free webinars, which, as I said, I'll be doing one about a week from now on my favorite way to capitalize on the platinum group metals, sign up for that or get on the mailing list, and we'll send you an invitation. And then watch the blog. I mean, that's all free stuff. I have a YouTube channel. I have a Twitter feed. I'm on LinkedIn. Don't do much on Facebook. I do have some social media presence there, but I've got a small team that kind of takes care of the social media. I do these interviews and hand it over to them, and they post it wherever it's supposed to go. And if you're interested in a subscription, there is a subscribe button on the website. You can pull that down, and there's a brief video explaining what you get for the service and relative to some of the others in the industry. So, Kenneth, I really appreciate your time. Hope I did a good job for everyone. I really do think this thing probably has been overdone. We'll see. Could be wrong. Obviously, you got to be nimble in these markets. I mean, you always do, but I think especially today, I mean, when these, you have microsecond trades going on in the market. It's been that way for a while. I mean, if you would have told me that they're putting computers near to the exchange, by 2 miles would make a difference in the fractional time it takes to get an edge on another computer, I would have just laughed at you when I was probably in my 20s. But now I know it's an absolute fact, and it's been that way for a long time. So, wacky world we're living in all aspects, including the financial markets. Let's see if some sanity returns. Hopefully it will soon.
Truly some extreme boom and busts that we are seeing in today's time, created by central bankers and not a free market. And that'll be interesting. That's another thing we didn't even talk about, but maybe for another day we can talk about the political scene as it's starting to play out. I tend to think we're going to see some fireworks this year and maybe some pure entertainment if we have enough of a lighthearted personality to just be able to step back and laugh at some of these things, because it's going to be quite the show. But David Morgan, thanks so much for coming on Crush the Street with me today once again.
Thank you, Kenneth.